welcome to Closing Trades right here in 80 now. Well, after yesterday's recovery, we thought the market is going to catch on to further momentum, but not quite. After dipping a little bit into the red again, you're seeing a mild bit of pullback coming in, but let's see where it takes us in the last 1 hour of trade. For now, of course, it's pretty nimble, just about holding our head above water in the green right now. A little bit in the red actually for the Nifty futures, which is circling sub that 21,700 mark, and a dip of 17 odd points is what you're seeing right now in trade. Under pressure, of course, ahead of its earnings is Infosys, TCS as well, not doing a whole lot, although TCS definitely has seen a marked recovery from where it started off in trade. It's holding up by about 0.6%, but again, not a material move, so to speak. M&M, Kotak Bank, Bharti, all pretty flat. SBI absolutely flat. ICICI Bank absolutely flat. What's Reliance Industries up to? For a second consecutive day, and mind you, this is not how Reliance began today's trading session. It didn't really start off with great gusto or was holding up well in the green for the better part of today's trading session. But in the second half is where you've seen that pickup come in on Reliance Industries. And thanks to Reliance, you're seeing that recovery as well on at an index level too, and that's clearly reflective on the way the index is moving. Shriram Finance, that's your big mover today, 5.5% higher there. Hero MotoCorp, 4.6% of a move. Torrent Pharma is looking pretty active. There's Voltas and AB Capital are all names which are holding out very, very smartly. Of course, there's no resurrection whatsoever for Polycab. That continues being dunked out, 20% lower for Polycab even right now as we speak right now. It's clearly been under the scanner, the government statement coming in, the fact that a flagship company indulged in unaccounted cash sales, that's really soured sentiment on the street. And while there was evidence, which the IT department as well clarified on just last evening, that there was evidence of unaccounted cash payments to the tune of about 400 crore rupees, and exceeding 4 crore rupees has already been seized right now in bank lockers, etc. from the company. So 20% lower, and almost 3 million shares traded at that on Polycab. But not just Polycab, whole host of other stocks as well, which are in focus this afternoon. So let's just quickly call out that list as well. Shriram Finance, I just highlighted, this is one of the key buzzers today. A whole host of brokerage upgrades as well trickling in on that stock, and you can see those revised target prices as well on your screens. The most bullish being from Goldman Sachs, 27.58 is where they're pegging the 12-month target on Shriram Finance. But yes, all eyes are now on IT earnings. So you've got TCS, Infosys, Wipro all in tow. Shortly, we'll go across to Anisha as well and figure out what to anticipate firstly from Infi and TCS, and whether Anisha, are you ready? Infi down, TCS holding up 0.6%. Is there some cue on what we can expect from the earnings?
Always ready for the IT companies, right? But yes, we are expecting some sort of weakness from Infosys. There could be a further cut in the guidance. And I think this will be the third time running that the company might come out with a trimming of the guidance, at least on the top end of the range from 2.5%. It can scale it down to 2%. And that is something that Street seems to be factoring in, because this time around, in terms of constant currency, we're all, as it is expecting a decline in terms of revenue. So it's not going to be a blockbuster number at all. The big question is what happens in terms of the commentary. And the other thing to watch out for Infosys specifically is the leadership exits, because over the last 10 months, 12 months, we have seen a slew of exits happening. So what's the reason of that? What's the company doing to stem that will also be important, because apart from earnings, the trajectory of growth is something that Street wants more clarity about. So headcount addition in that sense will be important too. For TCS, just a disclaimer that there might be a provision of $125 million on the bottom line. So don't get worried if you see a big miss versus the expectation or a big drop in year-on-year profitability. That is because of the one-time adjustment that might happen. On the top line, we're expecting it's going to be a bit of a steady show. There could be a decline of 0.2 to 0.3% in terms of constant currency, flattish when it comes to the rupee revenue as well. Margins might be actually stable for TCS, while they may weaken for Infosys, because Infosys has taken a wage hike impact. But again, commentary will be the key for TCS as well. In fact, let me take it across to Sandeep, because Sandeep, you have been quite vocal about your criticism per se of the move that we have seen in the IT companies, because it seemed like in December and January, they have run up way ahead of the expectations, and a slew of upgrades have come in from analysts as well. Do you think that this time around there'll be a vote of confidence coming in from the managements, or it'll be the other way around?
I don't think that the way the macro environment has turned out, the possibility that there'll be a further downgrade in estimates is much greater than an upgrade in estimates. No, but that doesn't stop analysts becoming more bullish after the results and calling it the worst as over result, which they have been doing for the last 5 quarters. So I think the same thing will be.
Okay,
Yeah.
so you're not expecting much when it comes to the IT earnings, more of the same. But let me just get a quick chart check as well. Nuresh, from the IT pack and the frontline names at that, what does the chart check suggest?
So, in terms of charts, if you look at Infosys, the stock has been sideways, not been able to cross the highs made in last of the whole year of 2022-23. So, till the time it doesn't cross 1600 odd levels, the trend remains sideways. And on the downside, 1350, 1400 remains the support. So, not really a great trading band. Same with TCS. If you look at it, every time the stock has come closer to that 3800 to 4000 mark, we've not seen much of a follow up, but structurally looks a little more better. And at the same time, when we look at what is happening in the rest of the names, you have something like HCL Tech, which trades at an all-time high. You have a Birla Soft trading at an all-time high. So there is discrepancy in terms of performance across the mid-cap, large-cap, and the small-cap IT names. Overall, the risk remains in terms of the small-cap and mid-cap IT names, which have hit new all-time highs and gone up 100%. And that any surprise on the earnings side could see a correction. So for now, this is a season where you don't want to
Out last 2 days?
But there's merit because Aisha, the stock has underperformed so much. It's crazy. Like it's done worse than even the IT stock where things have gone actually like and downhill. So there was a time. So it was a time for comeback. That's what we are seeing now. We could see Reliance outperform in the near term, and this entire going green thing actually is not something for which you invest because that actually will lead to further decline in already low return ratios of Reliance because the returns in the green investments will come after a very long time.
Still buzzing higher, 27.17 on Reliance Industries. In fact, let's hear out that soundbite of Mukesh Ambani on the sidelines of the Vibrant Gujarat summit just yesterday.
Reliance will contribute to making Gujarat a global leader in green growth. We will help Gujarat target to meet half of its energy need through renewable energy by the year 2030. For this, we have started building the Dhirubhai Ambani Green Energy Giga Complex over 5,000 acres in Jamnagar. This will generate a large number of green jobs and enable production of green products and materials and will make Gujarat a leading exporter of green products. And we are ready to commission this in the second half of 2024 itself.
Okay, point taken. But of course, it's Polycab and the entire wires and cable segment, which is seeing a lot of movement today. So you have RR Cable, which is down in the trading session. KEI2 is coming under pressure, apart from Polycab, which has seen a dropping of almost 20%. Though Havells is the one which is outperforming today. It was holding up in the green. Let's go across to Sharad to get a sense as to how this entire story has panned out and what's the latest development. Sharad?
Well, yes, important development coming in for Polycab as block deals have started coming in. Almost 6.93 lakh shares is what we are tracking. Amongst 5 big deals have happened already. The buyers and sellers are unknown. And importantly, if you look at the important shareholders who are the institutional shareholders, the names include Vanguard having almost 1.2% stake, with BNB Paribas DSP Investment, and even BlackRock having stake in the company. Also, Norges Bank and Tata Asset Management are also having exposure in the company. Now, let's look at the valuations, how it's Polycab is placed. And of course, at the peak price of almost 5,758 rupees, the P stood at 53.5 times. Now, do remember this is a 12-month forward P. And currently, after the correction, that is coming to at almost 33 times the valuation part. Now, of course, the stock tracker, if you look at it over the last 5 days, the stock is down 26%, and 1 year basis still the stock is up 48%. But overall, if you look at it, in the last 5 years itself, the stock is up 500%. Now, of course, we did talk about the valuations part, and if you look at the other peers itself, KA Industries also cracking in this trade, but still actually kind of going valuation wise 36 times, a bit higher when it comes to Polycab, while RR Cable also comes in between the 38 times range. The biggest competitor and the place where we actually compare the valuations is Havells, and which is trading at still at expensive levels of 52 times its 12-month forward PE ratio.
Corporate governance has to be of the highest standard, irrespective of the business or the module or the wealth creation. But such things definitely will not be, cannot be kept under the carpet. And I think they will have to come out with a large part of disclosure. Now, I am not privy to what has actually happened, and it would be wrong on my part to comment. But I definitely think that corporate governance at 22,000 has to be the key. So be watchful of, that is why we are saying certain mid caps have also made a lot of noise. Be watchful of the actual facts and start. That is what we are saying. Be overweight on the index because you have enough large caps there which have cushion of corporate governance, visibility, transferability, and everything which keeps you participating, and where market will again reward you over time.
Welcome back. Taking a look at the market, and it's holding on steady, actually building on to gains after that sharp knock that we had seen on an intraday basis. We have recovered most of the lost ground and back above that 21,650 mark. Individual names which are doing cartwheels right now: MRPL up 18%, Easy Trip Planners up 18%, Chennai Petro is the other one. So a couple of these oil and gas names definitely in focus. Kunal, what's your take on these? MRPL, Chennai Petro, these refiners per se hadn't moved earlier. What would you suggest as a stock recommendation right now?
Well, difficult to recommend at current levels because of the way these stocks are poised on their indicators after a 15%, 16% up move for these stocks, and an RSI of almost 88, 90, 89. For these names individually on the daily time frame, the risk reward is a lot more skewed. But the other point is that these stocks have not gone through any kind of a major correction in the last 5-6 months of the price rally for themselves. So I think Chennai Petro was almost at 350, 375 from those August lows, and the stock is now at 850 plus levels. So the run up is quite steep, but the only concern is that the short term indicators are extremely overbought for these stocks, especially after today's up move. So which means that we have to wait out for a price wise consolidation or any kind of a dip. Maybe a 4%, 5% dip could actually be a good starting point if that comes along the way for these stocks.
Sandeep, I want to talk about Polycab, the stock that we were highlighting just before the break. I mean, we've seen the kind of market cap erosion which has happened in the stock. And I mean, rightly so. You've got so much HNI and mutual fund concentration into this name, and it's all been in front of our eyes, the way the IPO happened, the kind of subscription levels and the kind of gains the stock has made since. But still quoting at 33 times on an FY25 basis. Of course, it has more expensive peers like a KEI or an RR Cable or even a Havells, for instance. But if Polycab were to fall another 20-odd% from here, would you be a buyer in the stock?
Have to say mostly unlikely because of the fact that we don't really know what the earnings will be now next year. Because once the kind of irregularities are caught, then we don't know what else is there. And once it become more clearer, then better they'll be able to show this kind of growth which has been showing for some time. In contrast, what many of the other bigger players have been showing, how does that go? I mean, all of that is coming. And many of these wires, again, I'm not sure of the management. Like, so I think we need to be careful. They should just look at the dip from the top. They should look at where the rally starts, how they are moved. Complete contrast to the entire consumer or durables basket.
Fair enough, Sandeep. We'll let you go on that note. Got you on a bad line. Hopefully, we'll speak with you soon enough. But shifting focus to what else is happening in the market right now in terms of the gainers, there's HDFC AMC, I think, which is up around 3% in terms of its earnings that came by. So we are seeing a bit of a move on that stock, suddenly seen quite a bit of spike there. And of course, on the losing side, a couple of these pharma companies like Dr. Reddy, etc., coming under pressure. It's a curious case of Phoenix Mills as well. Not that they reported any ugly number when it comes to the provisional data, but maybe the street was banking and baking in a lot more. Signed is the other one, which has slipped almost 3 to 4%. Naresh, what's your view on Phoenix Mills at the moment?
So it's been a slow and steady stock which has done really well. Any dips back to 20 to 50 to 2050 levels is an accumulate. The stock has this tendency to go into a sideways zone after such a big move. So out here, looking at it as a buy on dips, would expect a little more dip to be a good opportunity for the stock.
One star performer today was Hero Motocorp. That had suddenly surged 5 to 6%. And then, of course, the other two-wheeler names like Bajaj Auto, etc. were also in focus. Explain us the move in Hero Motocorp, if you can, in terms of the charts and any other two-wheeler name.
So I think out of the two names, Bajaj Auto was, I think, on the news flow in the last couple of days. The stock had gone through a sharp spike, I think, from that 7,000 to 7,400. That was the high the stock had made on that day. And then over the next couple of days, the stock is just about, going through a bit of a plateauing action at the 7,000 to 7,400 range for the last couple of days. So I would probably expect the stock to actually get into a bit of a cool-off mode from here on, because again, the indicators on the weekly and the monthly charts are extremely overbought. So I think the RSIs on the weekly time frame for Bajaj Auto is almost at 91, 92 levels. So in these kind of scenarios, what an ideal case is, traders who've been holding on to long positions, they can continue to hold on, but not to build fresh positions at current levels, because the risk reward is less than 1:1 into these kind of overbought scenarios for stock prices. But on the other hand, I think Hero MotoCorp is a classic case of a breakout, and especially from the point when the stock had broken past about the 4,000 levels. I think it was just 2 or 3 days back when the stock was almost at 40, 50, 40, 40 levels. That was a breakout for Hero MotoCorp, and from there on, it's moved up another 300 points. I would still believe that from current levels, Hero MotoCorp could be a better bet. We may look out for 45, 50, 4600 as a immediate target, which means potentially another 250 points in the near term is what we can expect for Hero MotoCorp.
You had a call on AB Capital as well, right? A few days back. That's made quite a spurt today.
Yeah, it's one of my, one of the few stocks which I'm very bullish on from a longer term play.
Okay, so what level do you see now? It's already at 180 thereabouts.
See, I think the stock has come out of 5 months of correction, and for the first time it's made a monthly and a quarterly breakout, which means that the first target for the stock should be at least a 190, 195, which is the previous swing high.
Okay, point taken. That's about AB Capital. But overall, for the market, it continues to be a steady show. It's a lot of names from the broader market like DOMS Industries, Motilal Oswal, Engineers India, which is actually seeing quite a bit of spike. And then talk about the jewelry names. Senco Gold, which is up around 7%. The provisional data was quite strong. Moti Sons, which was one of the recent listings, also saw a spurt of double digits, if I remember it right, 15 to, yeah, so it's locked pretty much an upper circuit. And then you, of course, had RBZ Jewelers, which has been an upper circuit for the last couple of days. We did speak with the management of RBZ Jewelers to try and understand what explains this kind of move. Listen into what they told us.
We are aiming to double our volumes in the subsequent 2 years. I think the company should touch at around 2 to 2.4 tons in the subsequent 2 years. I think this is the broader outlook of the company, and the proportion of the business divisions will remain same. We have already got a good pool of the independent retailers across India, and those are shifting from, let's say, one store to multi-chain of stores. So there are two things happening. One, an organized retailer who is already there is expanding. Another one is the segment is also getting transformed into organized. So with this two, both the shift happening simultaneously, I think we have got good names already on the basket, and the demand is there to fulfill. Generally, the season starts in the jewelry industry. The season starts from the first or the last week of July, and then the whole rolling happens in an aggressive way. But there are names there are names already there, and the demand is there, and I think with the funds coming in, we will be able to fulfill them much better.
Welcome back, and you're watching Closing Trades on ET. Now let's bring on board Ajay Bagga joining in with us as well. Ajay, very good afternoon, and thank you so much for joining in with us on ET now as always. I'm going to come to you and talk about one of the stocks that have been buzzing away, has hit a record high level. Obviously, BofA has upgraded it today, and that is Shriram Finance. When you're looking at it, also third consecutive month of gain that we've seen, strong returns already. Ajay, fundamentally, how is Shriram Finance looking? What do you see? Where do you see it headed from here on now?
Particular stocks I don't talk about, but I'll take it, to the broader NBFC sector. We are expecting revenues and margins to go down over the year. the growth trajectory to go down, single digit growth in profits. So the kind of run up today we are seeing in some select NBFC counters, we should be cautious about it. Cost of capital is increasing, and the margins are under pressure. RBI has been putting pressure as well on certain segments of the NBFCs. In this, uh, the truck finance and the vehicle finance, they have been doing well. But what we have seen is that the end user usage has not really picked up yet, and the linkages with the rural economy are strong. We'll have to wait and watch. Some of the NBFCs have a lot going in the rural economy where the demand has still not picked up. So I am a little circumspect on this NBFC segment. I think margins will come down and the growth trajectory of revenues as well as profits will come into single digit this year. I think that's the anticipation.
Ajay, hi, afternoon. Have to talk about IT. We'll have TCS Infosys deliver its numbers tomorrow. You've got Wipro, HCL Technologies as well. And in particular, talking about Infosys, the anticipation is that there could be a further lowering of guidance, clearly indicating that, the poison is not quite out of the system yet.
Yeah, quite a few segments in the US and in Europe, we are seeing a slowdown in the orders. And we have seen some major orders also either getting postponed or outright cancelled. So, Aisha, we'll be looking at clearly what is the headcount, what is the margin position, and I think the crux will be in terms of the new revenue avenues. So, how is the artificial intelligence rollout for companies going? What are the cloud revenue growth looking like? I think those will be very critical for the IT majors. And we'll get a lot of clarity now after the TCS and Infosys results. But clearly, right now, we are seeing a slowdown and we don't expect more than flat numbers for them. What we could see is in the smaller IT companies, the niche players, they could be getting a benefit of some new orders, but the bigger established players are having an issue, and I think a lot will depend on recalibrating the business models or getting the new capabilities in of helping companies to bring in artificial intelligence into their operations, machine learning, and all those streams will become very critical. But overall, looking at a flattish quarter for the Indian IT space for the quarter 3 of FY 2024.
Absolutely. Flattish quarter is what we were expecting for IT. But, Kunal, I'm going to come to you because all that's glittering is clearly those jewelry stocks. And some of them are newly listed players like RBZ Jewelers, Moti Sons, Senco Gold also among the recent listings that have come in. Overall in this space, is this something you would go and move towards the newer players? Do you find more value there? Or is that, you would still look at something like a Titan or a Kalyan Jewelers, which is there in this play for a while?
So I think it's a different set of charts altogether for the space. For example, Senco Gold, I think recently listed, the stock has done pretty well from 360 levels to a point when the stock is almost at 780 mark. In fact, today the stock made a high which is closer to 850 levels, and it's from the intraday highs that the stock has seen a correction. But then when I look at the charts, it's almost ending 2-3 months of consolidation closer to this 800 level. So which means that the stock may not be immediately ready for a breakout on the upside, but I think post maybe another couple of weeks of consolidation, I think 800 could be a good point for a breakout for the stock on the medium to long term charts. Titan, of course, has been a phenomenal gainer over the last couple of decades. In fact, even at current levels, I would actually believe that it's a stock which is showing a lot of consistency from the entire pack. Kalyan Jewellers is something which has sprung up quite well. In fact, the last 1 year specifically, the stock has been a lot more consistent with the charts. There was just one phase of a correction where Kalyan Jewellers, I think, corrected from 350, 360 levels to 300, 310, which is a good 15% odd correction. But I think post that, we've actually seen the stock do pretty well for itself. So again, a different kind of a chart altogether for Kalyan Jewellers, more of a consistent stock, less beta. But then I think from the space so far, it's Titan which looks attractive from a long-term play, and Senco Gold could be looked out for if as and when the stock breaks past about the 800 levels.
Okay, that's the take coming in on what to expect from the jewelry retail segment. But can't take your eyes off from the stunner today, and that's Reliance Industries, once again holding higher as we speak, a good 2.5% of an uptick coming in. Samit is here to tell us why Reliance has been outperforming since yesterday. Samit?
Well, in fact, if you see in the last couple of days, Reliance Industries has managed to gain close to 5%. Now, yesterday's 2.7% move was the highest move of Reliance Industries that we have seen since July 10, 2023. And yesterday, if you see, the stock was around 8% above its 50 DMA, 10% above its 100 DMA, and 12% above its 200 DMA. Now, what this means is that even if there's a fall, the downside would be limited for Reliance Industries as the share prices are not much higher compared to its daily moving averages. Now, apart from that, if you see in 2023, Reliance Industries was an underperformer as compared to benchmark because the Nifty was up around 20 odd percent, while Reliance Industries share prices were up around 11 odd percent. And since 2015 till now, never has Reliance Industries underperformed the benchmark for 2 consecutive years. So will Reliance Industries outperform in 2024? Let's look at the triggers first for Reliance Industries. Now, when it comes to the retail segment, it is the expansion of the businesses, and which will also start resulting or delivering into the financials, which will boost the financials of a retail segment. Along with this, it's the rising digital presence that the company has in the retail segment. When it comes to the telecom segment, tariff hike is the single biggest trigger for the telecom segment. Apart from this, it's the broadband expansion and the continuous rise in the subscriber base. When it comes to the O2C segment, that is the oil to chemical segment, this segment has reported range-bound results. The demand has also been pretty much stable. It is called the cash cow business of Reliance Industries and is expected to remain a cash cow at least for the next 7 years. When it comes to the gas exploration business, the gas demand in India has been increasing, gas prices have been stable, while the gas production of Reliance Industries has also been on an uptrend. And this business could also become one of the cash cows for Reliance Industries going forward. And lastly, when it comes to the new energy business, the commissioning of some of its projects is expected in the mid of 2024, and this segment is expected to contribute significantly to the company's earnings in the next calendar year, that is 2025. Now, apart from this, the other factors that are working in favor of Reliance Industries is if one needs to play the India growth story, Reliance Industries is one of the best bet given the fact that it gives you an exposure to telecom, retail, oil and gas and new energy. Apart from this, Reliance Industries also has an option to demerge its retail and telecom arm, and they are also expecting some value unlocking when it comes to the new energy business. And then when it comes to deleveraging, that is also expected to start in the mid of 2024. And lastly, the valuations of Reliance Industries, they are cheap in a relatively expensive market. Now, if you see the 12-month forward valuations of Reliance Industries, they stand at close to 11.6 times, while the 5-year average valuations or EV to EBITDA of Reliance Industries, they stand at around 12.3 times. So these are broadly the factors that could be working in favor of Reliance Industries.
Okay, Samit, thank you so much for that roundup on Reliance, and surely the stock is buzzing away in trade also right now. As of now, today also the stock is up more than 2%. But no, Ajay, India growth story is what Samit was talking about as well. Yesterday, we did hear Mukesh Ambani talk about their investments at Vibrant Gujarat as well, in Gujarat as well. And obviously the play coming in when you look at it, the retail side, telecom side. So as a, looking at the India growth story, is that something you would look at as well with so much value there as well?
No, definitely the India growth story is getting stronger and stronger. And what is the big change that has happened post December 3rd? That the market is factoring in political continuity. So there was a big risk embedded in the Indian markets in terms of the national elections, how they would pan out. That has got worked out to a large extent. So the markets are factoring in a lot of political continuity. So I think these plays, and especially the capital goods, infrastructure, telecom, oil and gas, power, all the broad economy, the real economy related plays are going to do pretty well.
Ajay, hold on to that thought. Lots more to talk about. For now, of course, the big high flyers, Voltas, Torrent Pharma, Hero MotoCorp and Shriram Finance, of course, continues to look good amongst the large caps. Not just Hero MotoCorp, but like Reliance, we've been discussing, and Bajaj Auto too, holding up very, very smartly. We'll take a very quick break. When we come back, the last lap of today's trade. Back for closing trades right here in ET now. We're still just about quiet, marginally higher as we speak right now. So, it's a bit of a tough fight to actually stay afloat right now. While, of course, Reliance is really supporting the index. Axis Bank is higher. But look at what's happening with the entire IT pack. L&T is down today. ICICI Bank once again is drifting into the red. And similar is the case with an SBI as well as Kotak Bank too. Let's take it across and hear our conversation with A. Bala. We will do that in just a second from now. But the gas stocks, like we were flagging off earlier, they're holding out pretty okay. So MGL has now sprung up a good 5.25% as we speak. But no resurrection for a Polycab. Z is still down 3.25%. Infosys, ahead of its numbers, has now cracked 2.25%, and I think we're at the lowest point in the day for Infi, 2% lower when it comes to the cash markets. 1490 is where the stock is right now, and actually the biggest laggard now on the index. Kunal, further weakness in Infi, and would you be tempted to short any of the IT names here?
So I think the best way to trade now the IT stocks is to trade them post results, because there are two data points which are a bit more tricky for IT names. The IVs, the implied walls for Infosys, for example, have shot up to almost 28 odd mark. The last I had seen during the day. That generally is an indication that we could be in for a big kind of a gap up, gap down opening for Infosys, depending on the results. But in case if the stock actually doesn't open with a severe kind of a cut on the downside, or a major kind of an uptick in terms of a gap up opening, then we could actually be looking at a point where we may look to initiate a buy or a sell, depending on how the stock gaps up or gaps down respectively. So I think the better way to trade for the IT stocks is actually post results. Pre-results, it's going to be a bit more tricky because of the huge volatility implied walls the stock has already shown so far, as well as the way the stock has run up in the last couple of weeks. So my sense is that it's always better to try and wait out for the event to cull out, and then post event, once the stock gets into a clear direction of a breakout or breakdown, then take the call in that sense.
Sure, and let's move on. And actually, in terms of on the sidelines of Vibrant Gujarat Summit, Tarun Mehta, CEO at Ather Energy, actually spoke to my colleague Sumit Chaturvedi. Listen in to what he's shared in terms of his plans for the IPO. Listen in.
So I can't comment about the timeline, but as I've been telling others, I think going public is linked to the maturity of the business. If you look at our cap table, if you look at our kind of shareholders and what it has done over the last 10 years, we feel really proud about how the business has shaped up. Its size, its maturity, it's just its overall discipline. So us going public would be in line with maturity of the business over anything else.
And nothing, so timeline you won't disclose, or there is no timeline being set? And profitability, would you also, profitability, would you throw some light on the profitability of the company?
I think over the next couple of years, we should see a great traction there. But beyond that, this is not the place for me to really dive deep into profitability.
Okay, that's the word coming in from Ather Energy. In fact, Ajay, quite a few IPOs, and the big ones actually lined up this entire year. You've got Ather Energy, you've got Swiggy, you've got First Cry, and I can go on with some of these names which have, which are businesses which have been long existent, and some mighty businesses at that.
Yeah, a lot will depend on how soon is the pathway to profitability. Right now there is a lot of froth in the IPO market, and we have seen multiple levels of oversubscription happening. So I think it's not very difficult raising money in this kind of a market with huge liquidity and a lot of FOMO. People have made money on listing gains. So we are seeing a huge amount of oversubscription happening. But when a lot of companies come in which are not profitable, which are based on promise, you're talking of something of China 2007 to 10, or a little before that. That kind of what will happen then is you are eating into future market returns. You are promising a lot to the investors by pricing such paper at a very high premium, despite being loss-making companies. We have seen a few of them do well. We have seen, in fact, talk of a few of them getting included in international indices as well. So more strength to that. But ultimately, the valuation comes down to how much free cash flow are you throwing off, and that means by pricing at these rates, you are really eating off the future investors or the future years, unless there is very sharp growth and there is, profits start flowing through. I would be little bit cautious on that. We have seen previously also very strong listings and then the stocks going down, and that destroys the sentiment. So let's wait and watch. But overall, IPO market looking very strong with good amount of liquidity on the sidelines and people making listing gains. That's become the game, not actually looking at the fundamentals.
Right, Ajay. Obviously, we'll keep an eye out on that. But, let's just take Kunal, your BTST trades for today.
So I'll go with two buy calls. The first one is about AB Capital. The stock has come back above the 200 DMA as well as a multi-week breakout about that 180 mark. So would suggest a target of 190. Stop loss to be kept at 174. And Voltas is the other stock which I've been bullish on in the morning. It's done pretty well for itself around the 50 plus mark so far. So would read at a buy with a target consistent at 1100. And for traders who are looking at a fresh buy at current levels, could keep a trailing stop loss of 1030.
Okay, Naresh, what about your BTST ideas?
So first would be a buy on Bosch Limited. The stock continues to slowly and steadily go up, make new 52-week highs. Stop loss now at 22,900, target price of 23,600. Second is a contra buy on SBI, which is corrected off late at a good risk reward entry point. Stop loss at 615, target price of 640.
Kunal, just picking up on ICICI Bank, since we've been discussing this stock on a daily basis, still continues to weak. I mean, even today you've got some of these two-wheeler names, Reliance, Axis is actually holding out, IndusInd is holding out, but not ICICI Bank.
Yeah, so this is the point which I was making a couple of days back, that the stock lacks momentum. So even if there was a bounce yesterday for the stock, there is hardly any follow through. In fact, the range for ICICI Bank is just 6 points or 7 points throughout the day. So I think 997 was the high and 989 approximately was the low for the stock. And I think it's been stuck into the 7-8 point band so far during the day. So after yesterday's kind of recovery, the stock not having major follow through, HDFC Bank making a fresh swing low, and the most of the banking names, SBI also I think intraday I saw was almost in a negative territory. So that indicates that there is no follow through for the banking stocks. And this poses a concern for the near-term trade for the Bank Nifty, and that is one of the major reasons why over the last couple of days I've avoided taking trade on the Bank Nifty and actually look to initiate fresh shorts on few private sector banking names.
Okay. That's the view on private banks and private sector banks as well. Ajay, let's look at these auto and Nifty auto. How are you looking at that? Because, two-wheelers obviously are doing better. We've seen in terms of numbers that have come in there as well. Overall, in the Nifty auto, is that something that one should focus two-wheelers, four-wheelers? Where do you see it going?
Yeah, you're going to get pretty good results in auto, and there is a recovery. You will get better results. The input costs also went down as the commodity prices came down. Volumes are on a good recovery path. The rural demand still remains an issue, so we have seen issues with the tractor numbers still not picking up. But the entire EV play, the replacement cycle for the public transport buses, which will give huge orders for multiple years to a lot of these players. I think all those are good factors. The trouble with two-wheelers is it's 60-70% rural and semi-urban base. So that is where two-wheelers are finding a bit of trouble. Still, the rural demand is not as strong as it should have been by this part of the economic cycle. The passenger vehicles are doing very well, and there is a premiumization happening along with the input costs going down. So you're going to get very good numbers from autos, and Nifty Auto could be an outperformer for this quarter and beyond, with good earnings numbers supporting a further run up in the auto pack. I think the PV segment and the commercial vehicle segment, these two will outperform.
Okay, Ajay, great to have you on the show and join in with your thoughts on the markets. Kunal, Naresh, we'll see you again with the trading action tomorrow morning. Today, of course, it's really been quite the tug of war. While Reliance, of course, was on one hand one of the biggest performers, continues its up move from yesterday, but could only really do that much. A whole host of banks, HDFC Bank, ICICI Bank, all underperformers. Kotak as well lower, M&M, L&T, and the entire technology pack. Look at Infosys ahead of its numbers. It's closing in with over a 2% cut on the futures. In the cash markets, of course, it flattened out towards the end. TCS just about a marginal outperformance coming in there. HCL Technologies as well has gone in lower in trade today, as has been the case with Adani Ports as well as Adani Enterprises too. Aside of Reliance, Hero MotoCorp jumped up about 4.5% today. Shriram Finance nearing in with a 6% move. MGL over a 5% traction coming in there. Torrent Pharma, AB Capital were some of the stunners in today's trading session. But for the index, it's been choppy and we're closing in pretty quiet for the day. But we'll see you with all the market action tomorrow morning at 8 a.m.